Alrighty, we are recording and it is a very happy Friday. Good vibes all around, TGIF. Hopefully you all are excited for the weekend. I myself definitely am. Gonna try to be on the golf course tomorrow. If not, because my area is gonna be riddled with thunderstorms, probably gonna be recording a video nice and early. So if you are new, very big welcome. I put out videos on this YouTube channel Monday through Friday. Saturday, I tend to put out free educational content revolving around anything fundamental analysis, technical analysis. What you're seeing behind me on my glorious screen, aka green screen here, pretty much the charts are up on TradingView. So I am a fundamental investor trader along with a fundamental trader and also technical trader as well. I think I just butchered that entirely. Pretty sure I did. Welcome if you are new once again. I keep things very real around this YouTube channel. And today I'm going to dive right into a lot of good stuff, a lot of bad stuff, and also talk about AMD as well for next week. I do want to talk about Amazon because their earnings dropped yesterday. I want to talk about Apple. I also want to pretty much talk about when I may actually potentially open a position in Apple, because Apple is a very interesting stock. I have been a shareholder many years ago in Apple, and I mean, should have honestly held on to those shares, but it was very much during crazy 2021 times where pretty much like any stock was just going up like absolutely up like crazy, right? But getting in Apple, it's a little interesting. So I kind of really want to talk about when I would potentially buy Apple, pretty much why. Grab some water, grab some coffee. I'm going to be rambling on for the next several minutes about stock, real talk. Oh man, I just killed some afternoon coffee. It is 2:48 p.m. Eastern Standard Time, and what you're seeing behind me is pretty much the 1-minute chart of AMD. I'm actually going to shift gears entirely and save AMD pretty much for the end of today's video. I kind of really want to talk about Amazon straight off the bat. So Amazon dropped earnings last night. It was a utter just home run in the sense of the chip trade, the AI infrastructure build out. Why is that? Well, let's go ahead and pull up their earnings, basically pretty much here. I'm not going to pull up all their earnings for the sake of the video, but there is one key metric that very much made this stock jump significantly. AWS. AWS net increase 37%. So the AWS side of the business on Amazon, it's been very much in the gutter. It was very much down in single digits, and then it basically made a comeback all throughout 2022, and then started really increasing. Now we're very much at levels that we've seen for Amazon since like 2021. So very much have to get above 40, because 40, I believe, was their top number on their AWS. But I mean, hey, still, Meta came out, and with Meta, the numbers were not really good. I talked about Meta in yesterday's video, I believe. Also talked about Robinhood as well, too. I am a Meta and Robinhood shareholder. I'm also a Meta long-term bull, and I'm also a Robinhood bull as well, too. Short-term for Robinhood, I'm actually bearish, and I bought more Robinhood shares. Short-term for Meta, oh yeah, I'm definitely bearish, long-term bullish. I'm not buying Meta shares just yet. I did talk about that in yesterday's video of when I would actually consider to buy more Meta shares. But Amazon, I mean, is there anything wrong with Amazon other than the fact that they just raise up their CapEx spending and they are seeing justification for raising their spending? It's very simple, okay? Let's go ahead and look at the three largest companies. Microsoft is definitely up there, but let's leave out Microsoft, okay? Look at Meta, Google, Amazon. Meta, ridiculous amount of CapEx spending, and they're not seeing anything really for it. And Mark Zuckerberg is not really giving long-term investors a clear justification as to why he's somewhat doing that. Obviously, for perma bulls around Meta, they're just going to say, hey, put your faith in Mark Zuckerberg. I tend to put my faith in God, among like people. Sure, I'll definitely trust people, but if you're going to be doing something that I don't understand or don't know, I'm going to be raising a question. Very much. And hey, for anyone watching me on here, because I am talking about stocks, you can always question me. Plenty of people have, and I don't mind explaining my logic. I try to very much justify everything in my head. I'm not a financial advisor, but I mean, a lot of the stuff I talk about, or I should say, all the stuff I talk about is what I'm thinking, I'm feeling, and also I'm doing. And I do post my public trades, and I also do have a public account that I made just for this YouTube channel. Yesterday, I did show that account. Today's video, I don't think I'm going to get around to it. Probably going to get around to it on Monday. But, yeah, I mean, hey, Amazon is spending a ridiculous amount. Same thing with Google. The cloud business on Google is exploding. Justification for spending hundreds of bills of capital expenditure amount of money. Obviously, the AWS is rock and rolling. Okay, I mean, when you go ahead and spend a obscure amount of money, and you're seeing a side of your business exploding higher, okay, like, I don't own Amazon, I don't own Google, I own AMD, and I'm very much riding AMD, but hypothetically, if I was in Amazon or Google, I would say, okay, obviously out of the three companies, Meta, Amazon, Google, I'm in 2 out of the 3 that's benefiting significantly. Meta is just not seeing a return on their spend. And that's when you're probably going to see Meta maybe being the first one to really pull back a little bit. So Amazon's earnings, I mean, it's great, but the CapEx spending is there. In my opinion, I think very much being in a investment is better because they're receiving the money, if you really think about it. But I mean, hey, Amazon, great numbers, great everything. And that's the reason why we're seeing a stock price of Amazon very, very high. Okay, very, very, very high. This entire candlestick is 1 week, obviously. Let me go to the daily here. So very, very big high. Now, with Amazon, understand that in order to break these highs, you're going to continuously need to see growth. And it's going to become harder, okay? It becomes harder for Amazon to get to new all-time highs because they're going to be spending a ridiculous amount of money. And then let's go ahead and look at, like, Google here. I did talk about Google's earnings in the previous video. And I mean, okay, we're seeing Google very much rebound. Why did they basically pretty much fall off? Well, they basically fell off is because, sure, the cloud business around Google is very much growing like crazy without a top on it. But they're still spending a ridiculous amount of money. Now, on the flip side, excuse me. Woo! I need some water. Hold on. Oh, man. I got some coffee burps, and I did get a haircut, by the way, yesterday. When it comes to Google and Amazon, it's going to be harder to bust through all-time highs because they're spending the money they make. On the flip side, you look at a company like AMD, well, AMD, we're seeing just these crazy swings. Now, I'm on the 1-minute chart right here, so all these candles is 1 day, right? AMD is experiencing crazy amounts of swings. And why is that? Hey, these companies dropped earnings. They're spending a ridiculous amount of money. The semis are going to benefit very, very much. Very, 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 very much. Okay. I do want to talk a little bit about Apple before getting into pretty much AMD here. So Apple did drop earnings too. To be honest, I didn't listen to their conference call. I very much skimmed through everything. And the reason I didn't listen to their conference call is because I am slammed right now with other conference calls. Coinbase, I actually did buy some more shares of Coinbase. And obviously Coinbase, very, very bearish right now. It's actually, let me get to it. Let me talk about Coinbase a little bit before getting to Apple. So, Coinbase, very much, their earnings are just not, I mean, you're talking miss on EPS, miss on rev. Yeah, why is Coinbase going down? This is a whole lot of common sense. Cryptocurrency is in the gutter. So when cryptocurrency very much turns around, Coinbase is very much going to turn around. So why am I a Coinbase shareholder? Because cryptocurrency is in the gutter. Why do I hold crypto, aka Ethereum? Because cryptocurrency is in the gutter. So I do believe that crypto is going to turn around. The Clarity Act actually just passed today. Don't quote me on that. I'm almost positive it did. Hold on. I got to pull this up. Double check. Did the Clarity Act pass today? And no, the Clarity Act did not pass today. Okay. That was actually a false headline. False headline that I actually got. So, yeah, that is the reason why I just fact-checked myself right there. The Clarity Act did not pass today. But do I think the Clarity Act will pass? I do. Do I believe crypto, Bitcoin will be making a comeback? I do. So, therefore, I would love exposure to one cryptocurrency, which is the reason why I own Ethereum, and also Coinbase, which is a broker for cryptocurrency, okay? So, yeah, straight off the bat, Coinbase not doing the best. But I mean, hey, external conditions. Now, what about Apple? Okay, this is actually a shell shocker for a lot of people. So Apple dropped their earnings. And I mean, was there anything wrong with their earnings? No. Like, their earnings was very, very much spot on. We go to the charts, and here's the big thing about it. Okay? The big thing about Apple, if you go ahead and look on the technicals, looking on the technicals, because you got to remember that technical analysis, it really does matter. And if you are just a fundamental investor, I highly encourage you to learn technical analysis, because here's the thing. I am a super long-term investor of SoFi. If you watch this YouTube channel, you know that I own well beyond 2,400 shares SoFi total on my two profiles. It's definitely over 2,000 shares. On my private profile, I'm holding 1,642 shares, $7.41 average. I've been buying SoFi since February of 2024, baby. So I have used technical analysis to buy shares of my long-term investments. It does matter, okay? If you look at the weekly chart for Apple, we were at all-time highs. And for a company like Apple to come in and very much beat, but not like beat like a crazy amount of beat. I mean, EPS, sure, 6.7%. Not even 1% up on revenue, okay? Like, you go back to the previous quarter, this is when I believe Tim Cook's last quarter was. Okay, nothing super, I mean, obviously not like a 5%, beat and stuff, but, I mean, if you're at all-time highs, you gotta come in and you gotta very much, like, it has to be a very good, like, woo! Wow, what were those earnings, basically, pretty much, right? It needs momentum. So, let me talk about Apple for a couple minutes here, because I would love to actually own Apple, and here's the reason why I would love to own Apple. Magnificent companies, okay? Tesla used to be part of one of the magnificent companies. It's so sad. It really is. I've taken a long position before a Tesla. I've taken trade positions before at Tesla. I've done a lot of options before on Tesla. Made a decent amount of money. No, I was not in Tesla many years ago. I've been in the market since March of 2020. Obviously not as long as some people, but definitely longer than maybe the average person that's just now getting into the market. But magnificent companies. 2023, you heard this word a lot because 2023, the Mag 7 led the market. You had Amazon, you had Google, you had Apple, you had Meta, you had Microsoft, you had Tesla, and one more. Nvidia. There we go. Mag 7. Pretty sure I got them all. If I did not, then, oh well, then maybe I got the vast majority of them, right? So the Magnificent 7. And then it also changed to like the Mag 5 because Google and Tesla was actually taken out of them, ironically, in 2024. So I would love to own Apple. And the whole thing about Apple is just that, I mean, like, okay, my thesis is very simple. I am a memorabilia human being. I am when I buy a product, I have brand loyalty. My first, I am 38 years old. My first cell phone that I actually bought, my parents bought me, you know, a flip phone when I was a teenager, but I bought my first iPhone in 2007 when I was 19 years old. And I ended up joining the military straight out of high school, USMC. And I remember I got done with boot camp. Had a couple $1,000s saved up, and I'm like, okay, well, I want to, you know, buy one of these new type of phone. I'll never forget it. I went down. I was actually on my my boot camp leave. It was 10 days long, and I was home visiting family. And I went to an Apple store for the first time ever, and I bought my very first iPhone for, I believe it was like $400. And it was the craziest thing on the planet. It was like, I felt like a badass. It was just amazing, right? Really wish I got into the stock market when I was 19 years old, but I worked extremely hard all throughout my 20s, just put my money into savings accounts, and then I saw the opportunity of a lifetime when I was 31, Rona. I was 31 years old, 2020. And to be honest, I mean, if Rona never happened, I don't know if I would have been in the market. I just went off on a tangent here, but it shows the power of investing, because the last 6 years of my life, I've made a tremendous amount of life-changing money just by sticking to very simple strategies. And words of motivation is that when you own great companies, especially on a pullback, when you get in, it's very great. So Apple, okay? When would I actually really consider taking a position in Apple? So, on the weekly chart, we can definitely pull back on a technical analysis basis, because Apple is probably going to run on a technical analysis basis, to be honest. We could very much pull back to 270, 272. That's the 50-day moving average. The relative strength index has a lot of room to go down to oversold territory of 30. I actually have educational content I made last weekend talking all about the relative strength index, RSI. Tomorrow, I may actually talk about the MACD, moving average conversion diversion. And basically, the MACD is this green line right here. Obviously, we have not had the bearish crossover just yet. If you look at the MACD on the screen, very much going back to, actually, let me go ahead and zoom in on the screen here. Yeah, you want to know what? Tomorrow, I do want to make a MACD video. Okay, so the bearish crossover, just in case you don't tune in for tomorrow's episode, the green line goes over the red line and it goes down. Okay, that's the bearish crossover. And then we start going up. Okay, so Apple has not had the bearish crossover just yet. If we have this bearish crossover on Apple on the weekly, we're going down. Now, Apple could very much go to the 100-day, which is about 250. Let me go ahead and pull up some price ranges here. So you're talking from all-time highs of 344 all the way down to, let's say, the 50-day moving average. We're down 21% on one of the greatest companies ever in the world, okay? Go down to the 100, we're down almost 30%. Let's go to crazy levels. Let's go down to 30. I mean, hypothetically, if Apple went down to the 200-day, that would be a crash in the stock. I would be buying Apple shares like friggin' crazy at that point. Utterly crazy at that point. Something bad would have to happen in the economy of the U.S., or something would have to happen bad in the company, okay? Now, do I see Apple going down to $211? No, I really don't. But I'm just gonna walk through the moving averages right now, because if you think Apple is going down to 200, I mean, hey, is anything stopping Apple from crashing? Like I said, you need a catalyst for Apple to go down. Now, if we look in the one-day chart, obviously on the one-day chart, on the MACD, we have the bearish crossover that just happened, and also the relative strength index is at 40. So we could be oversold maybe a little sooner on the daily, which could give us very much a bullish signal, okay? Now, going down to, on the daily chart here, if we go ahead and go down to the moving averages on the daily chart, going down to the 200-day on the daily chart, you're talking about pretty much earlier this year. We touched the 200-day back in March. I was buying actually tens and tens of thousands of dollars worth of stock back in March. Very bad time for the market. Now, hypothetically, could we go down 20% to, let's say, 275-ish? Sure. Yeah. We very well could go down to 275 on Apple. If we break $300, we could very much trend to 288. We could very much trend to 275, 278. Yeah, that's not unrealistical. So Apple definitely could be in that range bound. When would I realistically start accumulating Apple? Probably around 280, maybe 270, maybe buy some shares here and there. Why would I do that? Okay, so we are in very much a weird part of this stock market, right? We got six companies, okay? Actually, you want to know what? Maybe seven, ish, big companies, right? You got Amazon, Google, Meta, Microsoft. They are the companies spending, okay? Spending money like crazy. And then we got very much Nvidia, very much AMD. We can also throw in other chip companies as well, too. You want to know what? Maybe Micron is a better example. Let's throw in Micron, okay? So the whole point about it is that we have a couple companies spending a ridiculous amount, and we have other companies receiving that money. I am very much invested in the companies receiving the money, okay? So therefore, I do have a level of risk, because hypothetically, if the company spending the money stops spending money, the company receiving the money is going to go through a weird time period, right? Could very well be a crash in there. Yeah, the semis could very much crash on fear, okay? On fear. They're not going to go friggin' bankrupt, okay? These companies are going to be spending capital expenditure. It just, okay, instead of spending 200, we're spending like 150 bill, okay? The semis are not going to go bankrupt. It doesn't work like that, okay? But the fear of the algos is what's going to drive it down. Where's Apple? Apple is not receiving or spending money. That is why I would really be okay opening a position in Apple. Yeah. hey, they're not in that trade. What is another good thing about Apple that I really love? They really have not done too much with AI, and to be honest, their AI sucks balls. It really does. Siri is terrible compared to ChatGPT, Google Gemini. I mean, like it's terrible. My friggin' iPhone just picked up. If I tell Siri to play a playlist on my music, Siri gets it wrong all the time. I can go ahead and talk to Google Gemini. Gemini hears everything. Gemini knows my voice. It's just, the AI sucks. Apple has really not done a whole lot with their AI, which means imagine if Apple starts spoofing up their AI. That's pretty crazy, right? Does it bother me that Apple's market cap is pulling up the exact number here? Come on, man. Slow web browser. 4.47 T. Does it bother me about that? Well, do you see Apple long term as a $10 trillion company? Yeah. I mean, is Amazon someday going to be a $10 trillion company? Yeah. Is Meta going to be a $10 trillion someday? Yeah. Is Apple going to be up there someday? Yeah. So, I mean, if you see the long-term vision, it doesn't matter what their market cap is going to be. When Apple's market cap was 500 billion, people said, "Oh, it's over. It's over." Just because a market cap is so high doesn't mean it's over. Okay, it doesn't work like that. Especially with technology companies. Last thing I'll say about AMD is that AMD right now is the stock in the stock market that people are, it's very much all eyes on AMD. And the reason being is because everybody knows that the revenue, the growth is going through a NVIDIA kind of cycle. So everyone is super, super watching AMD. Everyone is like, hey, how high is this going to go? What is, the end of the year is going to be like? It's NVIDIA in 2023. That's what AMD right now really is. And that's just how it is. People were not very much excited over Apple. People, saw Meta and they're like, no. People saw Google, but at the same time, they got very skittish. Amazon obviously is justifiable for their CapEx. Microsoft even came in with a home run. AMD right now is just, it's all eyes on deck. It's very much, cell phone just went off. Very much all eyes on. So stay tuned for tomorrow's episode based around educational content. If you enjoyed today's video of me talking about stocks, hopefully you did. Smash the like button, and I will be making more content tomorrow and also next week. Take it easy, everyone. Crazy next week. Crazy. Palantir and AMD.